Hello and welcome back to Money Control's live stream. You're watching Closing Bell with me, Lavisha Darad, and it's the last day of the trading session, and it is turning out to be quite a fabulous Friday because if you look at the markets, it hits the day's high level, and we have stayed ahead throughout the day itself. So if you look at the levels, from the frontline index, Nifty is above that 24,300 odd levels, and even Sensex continues to surge over 400 points. So yes, it's a good day for the markets, and definitely that's turning out from the market breadth perspective too. If you look at the market breadth, that continues to remain in favor of the advances. The advance decline ratio standing at about 2:1, and the broader end of the markets, once again, they are smartly outperforming the benchmark index. If you look at the Nifty mid cap index, that's up by about a percent itself. Even the small caps have been leading the front in the broader end of the markets with about 1.4% gain. So yes, a smart outperformance from the broader end of the markets, and so far this week also we have seen that broader end of the markets have remained quite upbeat. But yes, India VIX that continues to edge lower. 4% decline coming in for there, so it's trading sub 18 odd levels, which is definitely showcasing that the markets have begun to price in the ease in the West Asia conflict, and of course all the eyes will be over the weekend on whether or not there is any true talks between Iran and the US in Islamabad. But yes, from a sectoral point of view, let's take a quick check of what is doing well and what is not. Nifty FMCG index has been one of the top sectoral gainers of the day with about 2.5% gains. Some weakness has been visible in the IT sector with about 0.1% loss. But that is also coming on the back of Wipro's muted Q4 performance and their weak outlook, which is why we can see that the IT sector is showcasing some bit of a weakness. Of course, in the past 2 days, we have seen that IT sector had been outperforming, and today there's some sense of profit booking which has emerged in the technology sector. But yes, pharma index has also flipped in the red, flat but with a negative bias so far as of now. So yes, apart from Nifty FMCG, you can see Nifty metal index has been doing quite well, and then you can see other than that Nifty PSU banks, realty index, all of these particular pockets have done quite fairly well at this point of time. But yes, let's bring up the table of how markets have fared so far this week, because you can see both Nifty and Sensex, which is both up by about nearly a percent, and this will be the second straight week for a good upward movement for the markets for so far this week itself. So yes, Sensex and Nifty both nearly up by about a percent itself. So not just this, but yes, the frontline indices, the broader end of the markets also, what a smart outperformance which is coming in from there. You can see in the table that the small caps and mid caps are anywhere up between 3 to 4% this week itself. So yes, that's up for mid and small cap index. And of course, sectorally, it has been the metals and realty and the FMCG which have gained this week, and autos that remain one of the sole sectoral laggards. So yes, a couple of events, bullet pointers on your screen that have shaped the markets this week. We did see yesterday Trump announcing a 10-day ceasefire between Israel and Lebanon, which has been well appreciated by the markets. Then you have the Brent crude prices hovering below that $100 per barrel amid some of the resolution hopes. And there is a blockade over the Strait of Hormuz, which continues to persist. And the US has been deploying ships and aircrafts on the Iranian ports so far as of now. So yes, apart from that, even the global markets, if you look at S&P 500 and Nasdaq, both of these indices have hit fresh record highs, and that has been driven on by the optimism on any signs of relief which is coming in from both Iran and US. But yes, for next week, we'll be watching out on all the eyes will be on the potential extension of the US-Iran ceasefire, the outcome of the peace talks, and of course, what lies ahead for the markets. But so far, for this market, and of course, for the day itself, it has been a winning day. And of course, the markets have been hovering at their day's high levels. But let's move forward and understand how the last minutes of the trade looks like and how you should be positioned. I'll quickly go across to my technical expert of the show. We have Nirav Chedda, who's the Assistant Vice President at Equity Derivatives and Technical Research at Nirmal Bank, joining us. Nirav, good afternoon. So good to have you back. And you can see that Nifty is above that 24,300 odd levels, and it's been holding that firmly. I mean, what are you watching out for next week now that there are talks which is likely to take place over the weekend between US and Iran?
Yes. Hi, Lavisha. Thanks for having me again. See, Nifty and Bank Nifty per se, there's been a very good rally from lower end. And both these indices have come near their 50-day moving averages. For Nifty, the 50-day moving average is around 24,450, and for Bank Nifty is around 57,290 odd. Now, this is significant? Because in the upward rally, this 50-day moving average always was a good support area, and whenever Nifty Bank Nifty came there, there used to be a bounce that is coming in. Now, when both of these are going down, see, overall trend is down only. If you look at the longer term chart, so it is significant resistance for both the Nifty and Bank Nifty, and this is one resistance which both the indices need to cross, and they are both closing below the 50-day moving averages at this point of time. So I would suggest that at least for today you should be booking profits and not carrying over positions to Monday. Why? Because it will play out as a resistance, and there is a good chance that Monday we might open lower. I don't know how the talks and whatever they will go on, but there is a good chance we might open lower, and some selling probably will come in for Nifty and Bank Nifty from current levels until this 50-day moving average is crossed above. So there will be a conditional call to buy only if this 50-day moving average is crossed above for Nifty, above the 24,450 levels. After that, probably 25,000 levels will come in. And for Bank Nifty, 57,250 odd levels, once that is crossed above, only then you will see 60,000 levels coming in. Until then, just book some profits and wait.
Okay, all right. That's the cue. Of course, 24,450 is something that you're watching out for Nifty on a benchmark index level. All right, Nirav, what about the India VIX that has relatively cooled off? It's trading sub 18 odd levels, and we have seen that Nifty has recovered about 8 to 9% from even the March lows. So, in terms of risk appetite, what's your sense?
See, that is probably the best thing that has happened in the last 2 weeks or so. The India VIX had soared up towards the 28, 29 levels, and that has now again come down towards its mean. So generally it stays in between, this 10 to 18 odd levels. It is now around the 17 levels, which is a good sign. Even though it is still elevated, it should come down below 15 to witness further buying in Nifty. But yes, it's a good sign, and it does tell us that the risk is reducing. So yeah, I mean, once it comes on below the 15 levels and you see a breakout above the 50-day for both the indices, it would be a bonus. You can really go out and look to buy both the indices.
Okay, okay, got it. Right, let's move on and talk about the broader end of the markets because they have been smartly outperforming. I mean, so far this week we have seen both mid caps and small caps up by about anywhere near that 3 to 4%. Nirav, what's your trend here? And of course, what are you watching out for?
See, I believe the largest amount of selling has come in mid cap and small cap space in the past 18 months, and they've been battered. Some of the stocks have gone down 60-70% as well, and in the last 2 weeks or so they've come up 20-25%. But I believe this momentum is going to stay on for small and mid caps. Even though large caps might be consolidating for some time, small caps and mid caps will outperform and they'll move up from here. So I will be a buyer in this space even now, and I'll be holding on to positions for the next month or so, at least from a small cap, mid cap perspective. One can look to go ahead and buy these, probably the index or the stocks, whichever you like, can probably outperform the larger ones.
Okay, all right. So you have been, certainly positive on the broader end of the markets. All right, Nirav, what about the FMCG index, top sectoral gainer of the day? And we have seen a significant correction from a sectoral point of view in the past couple of months. Do you think the things are looking better now?
Oh, definitely. See, FMCG index, if you see the last 3-4 year chart, it has done nothing. In fact, there's been a long consolidation in this index, and finally, you've seen stocks coming off their lows and they're moving up. So, this index looks good. So, the likes of Nestle, HUL, and the others can probably, perform much better from current levels. And I believe there is a good chance of a breakout coming in this index as well. So this would be a good index to buy for the next 15-20 days or so. Also, many results are coming in from this index in the next week. So it will be in the news and it should move up from here.
Okay, all right. Nifty FMCG definitely a positive on. All right, let's talk about some of the individual movers of the day. Let's start with Wipro because that shares has been reacting negative to its Q4 performance. And definitely the weak guidance for Q1 is also playing a spoil sport. If you look at the brokerages note, they've largely remained cautious on the counter. They've trimmed their targets. For instance, Morgan Stanley has maintained an underweight call, cut its target price to about 194. CLSA has retained a hold call with a 194 target. HSBC has also maintained a hold call. So yes, plenty of brokerages have remained quite cautious given that they have indicated a weak guidance for the first quarter itself. Nirav, what's your take? And of course, what's your sense? Because the stock initially did make some recovery in this month, but today, once again, we have seen that it has turned weak.
Yeah, I mean, see, the overall trend is still negative. Again, 50-day moving average played a part here as well. An important resistance of 207, which is also the 50-day moving average. It went there and it came down again. So there is a good chance that this stock will again witness some selling pressure from here. It can come down towards the 195, 192 odd zone. So I'm not very bullish on this stock at this point of time. Only once it crosses about 210 levels and closes above the same, that is when you can probably see a bigger rally coming in this stock. Until then, I don't really want to get into it at this point of time.
Okay, all right. You'll be avoiding Wipro for the time being. Of course, the stock has turned weak, and it is one of the top Nifty losers of the day also. But yes, another stock which is not reacting well to its results, that's your HDFC Life. Though it has recovered from the day's low, but still it's down by about 2% or so. The company did report a mixed set of Q4 performance with some key metrics which has missed estimates. If you look at total AP, that came in slightly below estimates. VNB stood at about 1261 crore rupees, which is marginally below the estimated of 1269 crore rupees. And as a stock also, the stock remains sub 700 odd levels. What's your take here? And of course, Nirav, how you're placed on HDFC Life, do you think it's an avoid too?
Uh, Yeah, actually, see, this stock has been in consolidation for about 5 or 6 years now. From 2021 or so, the stock has not done anything. Its high of 780 odd in 2021 has been broken only once, and then again the stock came down. So it hasn't really done much. No doubt it is at the lower end of the spectrum where good support areas are placed, at around 590, 580 odd. From a near-term point of view, no doubt it has come down, but I believe there can be some bounce which can come in up to 650, 660 odd levels. But if you ask me from a medium-term point of view, I'd not be a buyer in this stock because it's in a long-term consolidation and there is no end to sight at this point of time. So yeah, from a near-term point of view, you can buy with a 650 target and uh, a stop loss of 600 odd, but medium term just avoid.
All right, medium term, it's an avoid for you. That's your HDFC Life. And the stock is, it's recovered from the day's low level at this point of time, but still the stock is down by about 2% itself. But yes, let's move on and talk about one particular stock that is reacting positively indeed to its Q4 performance, and that's your Wari Renewables. The revenue had more than doubled. Net profit grew by about 66% on a Y-on-Y basis. Operating performance also improved with EBITDA rising 63% on a Y-on-Y basis. Though the stock has cooled off from the day's high level, but still it remains in the positive territory. Nirav, what's your sense here? The stock in the past month also it has outperformed with about 40% gains.
Uh, yes, it has, but it's a very big candle for a particular week. It started around 900, went up to 1200. I believe there can be some sort of selling pressure which can come in this counter. So if you've bought, I think you should book profits.
Right.
And again enter once the stock comes to around 1000 or 950 odd, which is a good support area for this stock. But as of now, it has moved up quite a lot, so it will be better to book profits at this point of time.
Okay, so some profits can be taken from the table given that the stock has rallied quite a bit. And today also the stock is up by about 5% itself. All right, that's the key takeaway for Waaree Renewables. But another stock in focus is your Dixon Technology. That stock is also up and about. If you look at the counter, it's up by about more than 0.5% itself. And we did see Motilal Oswal reiterating a buy rating on the counter with a target price of 1700 rupees, which implies about 20 to 30% upside from the current levels. But Nirav, from a near to medium term, how does the stock look like from a technical perspective?
Oh, this stock looks very good. I believe you can actually look to buy this stock at current levels. There's a breakout here, and this stock can move up to a 13,000 odd levels very soon. It made a very good consolidation between 10,000 and about 10,500 with very good volumes going in, and then a 50-day moving average breakout has also come in. So I really like this stock. You can actually go ahead and look to buy this stock at current level with a stop loss of around 10,800, and probably 12,500, 13,000 is what will be your first target.
Okay, all right. That's your Dixon Technologies. And let's take another stock in focus. That's your Angel One. The stock has been doing quite well today. It's at the day's high levels and it's showcasing gains of about 10% at the current price point. And as we did see that the company reported about 83% rise in the net profit. Revenue also zoomed by about 38%. And from an EBITDA and margin point of view, also, we did see a good performance. Nirav, what's it like for you for Angel One? Because in the past 1 month, the stock has done quite well.
See, basically, this stock was in a big consolidation, and after yesterday, after yesterday, there's been a huge breakout which has come in. There's a 2-year breakout, a falling trend line breakout as well. So very likely this stock will now move up towards a new zone up to 380, 400 odd, maybe higher. It's a good stock to enter at current levels. One can look to buy the stock at current levels. You can keep a stop loss of 300, and 380 is where you can probably look to book some profits.
Okay, got it, got it. That's the key takeaway for Angel One. But let's move on and talk about some of the shrimp stocks. That's your Avanti Feeds and Apex Frozen Foods, which have also seen a decent rally today. And both of these stocks have done relatively quite well from the past 1 month perspective as well. Of course, Nirav, we've seen that both of these counters have remained quite subdued because of the tariff pressures. But from a near to medium term perspective, do you think it has enough fuel to rally ahead?
I think both these stocks have actually rallied quite a lot in the last month or so, probably the last 3 months. So now, the indicators are suggesting they are overbought, and there's a chance that they can probably come down. So if you have these counters, it's a good time to book some profits and wait on the sidelines, because there is a good chance of consolidation coming in, some selling coming in Avanti and Apex. Avanti can come down towards the 1300, 1350 odd levels, which is where you can look to buy again. And for Apex, the level can be around the 440 or 420 odd levels. Once it comes there, that is when you look to enter again.
Okay, all right. That's the key takeaway for all the shrimp stocks. But another sector which is doing quite well, that's your cigarette companies. They've gained today because of VST Industries posting a stellar Q4 performance. Now, what we've seen in the Q4 numbers is that VST's net profit has more than doubled due to their one-time exceptional gains. But even the top line has also grown by about 30% on a Y-on-Y basis. And even from an operational point of view, the company has performed quite well. Nirav, what's your take on the entire cigarette segment, be it your ITC, VST, Godfrey Phillips, given that this year will have the government's tax increases? So, do we expect that from here on there could be a sideways trade momentum which is building in, or there is enough rally which can be felt from the coming days?
No, I think this segment, if you just look at this segment, they are all actually down. Lower top, lower bottom formation was taking shape, but then consolidation came in, and then a reversal with volumes in all the three counters, VST, Godfrey, and ITC. All are poised to now move up from current levels. If you ask one, I'd probably look to buy Godfrey Philip. From here, it can move up quite fast up to the 2600, 2650 odd levels. So look to buy the stock at current levels. Your stop loss should be 2000, which is a very good support area. And once 2600 odd level comes in, that is when you book some profits. Even for the other two, both can move up as well. But I think the intensity of Godfrey will be much higher than the other two.
Okay, all right. Godfrey's intensity could be higher than the other two. But yes, let's move on and talk about CRISIL because this stock is at its day's high level. If we pull up the charts, the stock is exhibiting gains of about 5.5%, and that is coming on the back of its good set of Q1 performance. So yes, they follow the calendar year. So Q1 CY26 performance has been fairly quite well because revenue has risen by about 30% on a year-on-year basis. Net profit has climbed by about 46%, and even the research business, which contributes about 70% of the company's top line, that has also grown, quite strongly with about 35% on a year-on-year basis. What's your take here, Nirav, for CRISIL? How does the near term look like for this particular counter?
I like this stock. See, basically, the reversal has come in this stock, and very importantly, 50-day moving average has been crossed above. It is being closed above. So there is a good chance that this stock will come up toward the 4800 to 5000 levels very soon. And that is where you book some profits. But you can look ahead, buy this stock with a stop loss of around 4200.
Okay, all right. 4200 can be the next stop loss for CRISIL. But yes, let's move on and talk about some of the jewelry stocks. Titan, Kalyan Jewelers, all of them have tumbled in today's trading session, given that there are reports which have suggested that Indian banks have halted gold and silver import orders for overseas suppliers. Some bit of a recovery from the day's low levels, but we did see reports which have suggested that there are tons of precious metals which has stuck at the customs because of no formal government order so far which has been issued for the bullion import. And without these fresh imports, they do face the risk of a supply shortage. But from a near-term angle, how do they look like for you, Nirav? Titan, Kalyan Jewelers, all of these, jewelry companies?
See, for some reason, Titan and Kalyan both have different charts. Uh, Titan, after a consolidation, is now witnessing a higher top, higher bottom formation. Very likely, it is going to move up towards 5000 odd levels from here. So, for Titan, you can look to buy with a stop loss of 40 to 50 for that 5000 target. Kalyan Jewelers is in a big consolidation from the last year or so, and there's no end in sight. There's no breakout which has come in. So for Kalyan, I'll not be a buyer at current levels. I'll be waiting for a breakout above the 465, 470 odd levels. Once that comes in, only then I'll be a buyer. So from this space, at least Titan would be a buy. Other than that, nothing much.
Okay, all right. Not so much bullish on the jewelry space, but Titan is a good buying opportunity from the current levels. All right, let's move on and talk about Gujarat Gas. This particular stock has surged quite smartly in the trade today. 8% gains coming in for the counter, given that Nomura has double upgraded the stock from reduced to a buy, citing multiple tailwinds from the US-Iran conflict, followed by some of the attractive valuations following the recent correction. And we have seen that in the month of March, the stock has already tumbled by about 20 to 23% itself. Nirav, for you, do you think it's a buy at the current levels?
Oh yes, most of the indicators were in the oversold zone. They've turned now in this week with the buying. This stock has been in a lower top, lower bottom formation since 2021. From 780, it came down to around 300 odd, and then a reversal. So the chart looks positive as of now from a near-term point of view, but from a longer-term point of view as well. Once that breakout of 425 comes in, you might see a very big move in this stock. But at least for now, I'll be a buyer from for this stock for a target of around 420 odd. You can buy at current levels, and on certain declines, 340 should be your stop loss.
Okay, all right. So buy for Gujarat Gas, and you can see that the stock is at its day's high level itself. But let's move on and talk about HDFC AMC because that stock has also relatively done quite well today. It's at the day's high levels, and of course, it's a 5% gains coming in for the counter. And we have seen that the company has reported a good set of numbers from a March quarter performance. What's it like for you for HDFC AMC, Nirav? Because the stock has seen a good breakout.
Yes, it has, no doubt about it, but it has come near a very important resistance. This is the third time it has come here, and if it witnesses resistance, then there's good chance that some selling pressure will come in. So I would be I look to book some profits at current levels from this stock. It can come down towards 2600 odd, from here. So I'll not be a buyer until it crosses about 2900. Till then, just book some profits and hold on the sidelines.
Okay, all right. So 2900 is something that you're watching out for HDFC AMC. All right, just last couple of seconds before we get to the close, and we'll discuss some of the more stocks in news and, of course, what is gathered given that it is the onset of the earnings season. So we'll be watching out how the slew of earnings pans out. But yes, the last race which is coming on your screen with Nifty closing well above that 24,350 mark, about 150 points gain coming in for the benchmark index, and even Sensex for that matter, it's showcasing good set of gains with about 500 points gain coming in for there as well. So yes, markets closing in at day's high level. And if you look at the broader end of the markets, they have smartly outperformed today. Nifty mid-cap is up by about 700 points with about 1% gains. Even the bank Nifty has done quite well with about nearly 1% gain, so to say. So with that, we have seen that it's the second straight weekly gain for the benchmark index. So yes, that's a good setup that is coming in for the markets at the current juncture. And of course, you can see the advanced decline ratio. It remained healthy throughout the day itself. 2:1. That's where we stand in terms of advanced decline ratio. India VIX continues to cool off with about 5% decline coming in for there as well. And even some of the sectoral pockets which was reeling under pressure, they have also come back in the green. For instance, your Nifty IT index, when we started the 3 o'clock show, it was in the red, but it has flipped back into the positive territory. Even the pharma index has come up in the green with about 0.1% gains. But yes, apart from that, you can see Nifty FMCG index, like we were discussing, the near-term charts definitely look quite positive. Today also the stock index has done quite well with about 2.5% gains. Nifty metals, PSU banks, realty, you name it, all of these sectoral pockets have done fairly well in this upbeat market. And you can see, let's take a quick look at some of the top gainers and losers on the Nifty 50. And among the gainers, you can see that HUL has topped the chart on the Nifty 50 with about 4.5% gains coming in for there. Nestle has also relatively done well. So all of these FMCG players are dominating the list today. JSW Steel with about 2% gains with about 25 points uptick coming in for there as well. Apollo Hospital with about 2% gains. Power Grid with about 1.5% gains. Reliance Industries has done well. Max Healthcare with about 1.5% gains. But on the flip side, you can see some of the casualties of the Q4 performance, which is dominating the list. And starting from Wipro with about 2% decline, HDFC Life with about 2% decline as well, Sun Pharma with about 1% decline, Bajaj Auto, M&M, all of these counters remain some of the top Nifty laggards for the day at the current juncture. But yes, coming back to you, Nirav, for JSW Steel, given that this has remained one of the top Nifty gainers for the day, and we have seen the kind of traction the metal index has seen over the past couple of sessions as well. What's your take here, and are you bullish on this particular counter?
I'm very bullish on this counter, this stock. Even though Nifty went down, in the last 1 year or so, this stock hasn't seen any fall. In fact, it is making a higher top, higher bottom formation on the longer term chart.
Okay, all right. I think there's some bit of a technical angle and issue over there. But yes, JSW Steel, like we was pointing out, that from metals point of view, it looks quite attractive from a near-term levels. All right, but Nirav, you're back with us. You were talking about JSW Steel and how metal basket looks attractive at the current levels for you.
I really like this counter from a longer term point of view as well. It can go up towards 2000, and from a metal perspective, most of the counters have witnessed a long term breakout. So, once this breakout comes in, you see the stocks moving up, not from a 1 day, 2 day perspective, but from 6 month, 12 month perspective, where almost through this 6 or 12 months, you will see them perform much better than the others. So I really like this basket as a whole. Likes of Hindalco, Vedanta have already closed near its all-time highs, but the others as well. Something like an NMDC has broken out. Jindal Steel has broken out. SAIL, Tata Steel. So all of this, I really like this basket as a whole. One should have metals in your portfolio from a 3 to 6 month perspective, definitely.
Okay, all right. Metals is something that you are quite bullish on. Right, let's discuss about another stock which has done quite well from the BSE small cap basket. That's your Apollo Microsystems. You can see the stock which is soared in the trade with about 17% gains. And this is coming after the company has secured a lifetime validity license from the government to manufacture ammunition. Now, what they have mentioned in the license is that it gives authority for the company to manufacture, assemble, integrate and proof test some of the high value strategic weapon systems. So yes, that's the key takeaway for Apollo Microsystems, and of course it has closed at the day's high level with about 17% gains. Nirav, how do you see today's breakout and what lies ahead?
It's a big breakout. This stock came down from 350 odd up to 180 odd. Post that, good reversal and a big breakout. From a medium term perspective, this stock can come up towards 340, 350 odd. One can look to buy this stock at current levels, and on certain declines, 250 will be your stop loss.
Okay, all right. 250 can be the stop loss for this particular counter. That's your Apollo Microsystems. But let's discuss about one more stock. That's your Bajaj Consumer Care. Given that we've seen that all of these FMCG counters have relatively quite done well, and of course today also we can see that post its Q4 numbers, this particular stock has settled with about 10% gains, with about net profit at 78 crore rupees, revenue standing at about 308 crore rupees, and the stock has seen a good breakout today itself. Where do you stand on Bajaj Consumer?
So I was just remembering, this stock. It was one of the most frustrating stocks because even after good numbers, good chart, this wasn't really performing for the longest period of time. But in the last 1 year or so, when the markets were down, this stock has outperformed everything else. From 150 odd, this stock has moved up almost 3x up to 470, in fact 3x as well. Definitely a very good stock from the chart perspective, but it has moved up quite a lot now, and expect some amount of selling pressure or consolidation in this stock. It can come down towards the 425, 430 levels. If it does, just go ahead and buy, because that will be a good level to enter again into this stock with a stop loss of 400. And eventually the stock can move up towards the 600 odd levels, which should be the target area.
Okay, all right. All right, just one last question before I let you go, Nirav. I know we discussed a range of stocks, but what would your top picks be at this hour?
Yeah, so we've been talking about metals. So my first pick should be from this space, because I really like this space. NMDC is what I'd like to buy at current levels with a stop loss of 85, and I expect 98 to be the target, and it to come very soon. Second stock is Biocon. This stock is in a consolidation, but from a near-term point of view, very good support area of 340. It touched yesterday, and from there a good reversal has come in. I expect some good buying to happen in this stock from current levels. You can buy this with a stop loss of 340, and 400 should be your target.
Okay, all right. Those are the top picks of the day, and of course, so with that, we have to let you go, Nirav. Thank you so much for your time and joining us.
Thank you.
All right, it has turned out to be a fabulous Friday for the markets. If you look at the Nifty, it's logged a good set of gains and it has turned out to be above that 24,300 mark. But like Nirav was pointing out that unless and until Nifty moves beyond its 50-day moving average that lies at about 450 odd levels, until then we could see some bit of a profit booking at that particular counter. But yes, of course, let's take a quick check of how the markets have fared so far this week. Like I was talking about earlier, that Sensex and Nifty, both of them have up by about nearly 1% itself. Bank Nifty has also done relatively well. Mid-cap and small-cap indices, they have been smartly outperforming for this particular week with about 3 to 4% gains. And only one particular sectoral pocket has been feeling and they're reeling under the pressure. That's your Nifty Auto Index with about nearly 0.9% gains. Some of the top sectoral gainers of this week have been Nifty FMCG, consumer durables, PSU banking index has also relatively done well, but Nifty realty and metal index definitely the top sectoral gainers for this week itself. Some of the events that did shape this particular markets for this week. We did see the ceasefire announcement, and then we had the Brent crude prices falling below that $100 per barrel. Whether or not it continues to remain below $100 per barrel is something that we'll be watching out over the weekend of how the talks between the Iran and US takes place and what the outcome is in Pakistan itself. But yes, the US markets continue to remain outperformers for this week. S&P 500, Nasdaq, they sit at record high levels, driven by some optimism which is building in on the back of the Iran truce. And then we had also the Q4 earnings, which also trickled in. We did see Wipro reporting its Q4 numbers, HDFC Life. Both of these counters were quite weak today on account of their weak set of Q4 performance. But apart from that, we have seen Nifty rising above that 24,300 mark, and whether or not it picks pace from here on is something that we'll be watching out for. But what are the events that can be tracked for next week itself? Of course, like I was mentioning, the potential extension of Iran-US ceasefire is something that we'll be watching out for. Oil price movement is something that we'll be tracking. And then we also have some, macro data. You have the India's manufacturing and services PMI data, which will be due next week. We have Japan's March inflation data also. And then we also have US retail sales data also, which will be due next week itself. And some of the earnings, which will continue next week. We have HCL Tech, Nestle, SBI Life, Tech Mahindra, Infosys. All of these counters will be reporting their March quarter performance. So yes, so we'll be watching out for them. But let's talk more about markets and, of course, what lies ahead. Let's quickly go across to our next guest on the show. Joining me is Feroz Aziz, who's the joint CEO at Anand Rathi Wealth. Feroz, good afternoon. So good to have you back. But since the time we talked, there has been plenty of volatile swings. And now we have US President Donald Trump notifying us about the 10-day ceasefire between Lebanon and Israel. And the outcome of peace talks is something that we'll be watching out over the weekend. So in terms of conflict and market implications, what are your first thoughts when you read the market sentiment?
Good afternoon. When I see the market sentiment, the data very clearly showed back then when the war broke out in the weekend of 26th of February, the Nifty was about 25,178. On your sister channels, I would have probably told it numerous times over the last month and a half since the war has been on, that we analyzed 12 different wars in the past. Every war looks different, but there is something different. There's also something common, that the market's gravity is upwards. So 11 out of the 12 times, markets went back to a level greater by 7% than the place where they started falling from. When the war gets over, the market retraces back that level and retraces, and like how. There's only one instance where the market after the war was over is still 6% lower. This data was already given, but I still say the same thing. You see the markets went to 22,313 on 30th of March. We're back to 24,300. If the entire war were to finish, then you should see levels greater than 25,200. Of course, who's to say how long the war would last? But I think the signs of war coming to at least a slowdown is very imminent. That's one. Second, very important point is whenever market volatility happens, the weaker hands go out of the market. Just like when you saw in COVID, when the Nifty went from 12,300 to almost about 7,600 on a closing basis, you saw that all the weak hands quit in the first 4 or 5 days of such a panic. Then the actual ownership is more solid. So the rallies become so much more solidified because the weaker trading hands are out. So I think that's what I see, that market resilience and lower volatility follows, at least on the lower side. After every massive correction, that's about 25% corrections. There are about 8 instances in the century. Every time the low wall situation on the lower side emerges after a high wall situation, the tunnel gets over. That's called the wall tunnel. I still anticipate the same.
Okay, okay. Does this mean, Feroz, that the worst of the conflict is already in the price? Because so far, Nifty has recovered about 8 to 9% from the March lows.
See, one can't say that. I've analyzed last 26 years. Every year, the market finds a reason to fall 15% from peak to trough. This time, the reason was Iran war. Last time, it was something else. Every single year, average, it has fallen 14.73% from peak to trough. 2026 was a little unusual. The peak to trough so far has already been 14-15% because we went to 26,000. So is the worst over? I don't know, because there's going to be news dependency. Is there a catastrophic fall in the weighting? I saw 2 articles on very, very popular news channel, print media, which spoke of 15,000 and 17,000 of Nifty in that weekend. Okay, just empathize with an investor who's a 5-year, 10-year investor, reads that newspaper and sells, or that article and sells, then he is out of the market for good, because 17,000 to na aaya, usne 21 22 pe bech diya, 23 pe bech diya. So point is, can the market fall 5, 7, 8% again? It can. That's business as usual. Can it fall 20%? Very unlikely, because big sellers have sold. Big sellers have sold both in the cash market, the derivative market, the leverage, MTF market. If you look at all of these and demand and supply, and there's one more variable which you will not find in India, which we track, is what is the yesterday's cash surplus approximately in debt funds, in equity funds of India. The number is 1,96,216, this give or take. How do we calculate that? That's a separate story. Yesterday, the inflow in equity was 5,464 equity funds. They only deployed 397 crores of cash. So they added to the cash pile 5,000 crores yesterday, domestic institutions. So this is the number I track every day to see whether domestic guys have cash to buy, because those are the only guys who are buying. If they don't have cash, then I would definitely say worst is significantly not over.
Okay, got it. Feroz, then how are you viewing the valuations given the kind of correction we have seen in terms of the conflict? I mean, do you think the kind of inflation and growth risks which have emerged, are you still, positive on the terms of valuations that we're trading at?
I think to look at valuation, there are 2 ways to look at it. Of course, an FII is very upset with our valuation, even after the correction, as you can see, because this year or this month also, he sold about 45,000 and the domestic guys have bought 34,000. They're upset because they find other emerging markets more relatively cheaper. But one biggest point which one needs to keep in mind is financialization of savings into equity has not happened in India. If there is 1,200 lakh crores of household savings, there's only 6% of that in both direct equity and mutual funds. When there's a flight of capital for a country this large between debt and equity, which seems to be happening, US, Japan have all gone through huge bubbles. 18, 19 PE on Nifty can't be called a bubble, especially when financialization of assets from debt to equity, which has not happened in India, is now happening. So if I spoke to NFI, I said, there, you're so upset with 18, 19%. If I already had 25% of Indian household savings in equity and I was still at 18, 19, you are absolutely right. But when that happened to Japan went to a bubble which took 30 years to recover. That's still ahead of us in India. That's one. And second, if the top 10 stocks of Nifty, out of which 5 have given no return for 3, 4, 5 years, that can't be exaggerated valuations. You just look at some stocks in top 10 of Nifty, which is 66% of Nifty, 5 of them have not made money for 3, 4 years.
Okay. So what does this mean in terms of the growth earnings expectations? Because so far we have seen we are into the low single-digit earnings growth from the past couple of quarters. So does it justify with the kind of valuations that we are trading in? And of course, going ahead, given that, Q1 is already at risk because of the, Brent crude prices spiking up to above that $100 per barrel.
Yes, that's exactly why you are 8% lower after 1.5 years of time correction. You can't double count the same adversity or double count the same benefits, right? You are, well, of September 2024, we were at 26,200. We are sitting at 24,300 and kind of close today. And that's 18, 19 months of time correction. Earnings have gone up totally for Nifty by about 17% in the same period. I don't look at earnings as a growth number. I look at it as an absolute number. Growths can be deceptive. 1176 rupees is the earnings of Nifty which we expect. I personally think after the fourth quarter that should be possible. If 1176 is delivered, I think we will clock about 8%. Of course, it's lesser than what one would expect, but on a nominal side, we are above 11%, which is the long-term average of earnings growth.
Okay, got it, got it. But if you had to stay ahead, which one would you pick? Would you stay abreast with the large caps, or would you relook at the broad end of the markets, which is your mid and small caps?
I would say small caps. People generally have been telling during this war, I've been saying small cap has got value because Indian small cap definition itself needs to be small, cannot be called small. Because if you have the maximum number of listed companies in any countries in India, and if you look at 500 stocks, which is the NSE 500, is what a domestic guy categorizes as large, mid, and small. What happens to the rest of the 1,500, 2,000, which get traded actively? Those are all called micro caps. Small cap itself, the largest small cap is in more than 50, 60,000 crores of market cap. So I personally think small cap has value, one. Second, I have tracked after the war. There's only one day, which is March 30th, when small caps have had an outflow in India. So Indian investors become far more smarter. Every day in April, small cap funds, which is a little over 30 funds, have got a positive inflow, whereas they could have had an outflow. So Indian investor is buying sensibly, not unsensibly. We got 40,000 crores of total inflow, out of which the small cap inflow was the highest for March, and people won't believe that nobody's taking that advice from experts saying don't buy small cap, which is actually a wrong advice because at least 15% of the 40,000 crores have to go to small cap. And I would say small cap has value. So equilibrium of 60-20-20 between large, mid, and small is a great combo.
Okay, got it. Feroz, any themes from the small caps that you're finding attractive at the current levels?
I think the broader market in small caps, I don't think you should do top down at all. You should do bottom up or buy a index fund or a fund like a mutual fund. I would not recommend themes in the small cap category. Do top down in large cap, do bottom up in small cap. If you're a direct equity investor, look at those stocks, which are those 20 stocks. Even after the war, they didn't fall. That means their ownership is very, very solid. There are 20 odd stocks which were positive at the peak of the fall, which is on 30th March. Those 20 stocks of NSE small cap 250 have actually the hypothesis that these owners are not worried about the market because they've bought the business. So solid ownership is generally established during market correction. So look at these 20, do your bottom-up research and see if there's something interesting out there.
Okay, got it, got it. Feroz, any themes that you want to point out here from the large cap space that you were talking about? Anything that you're finding attractive from the current price point?
I've been saying ABC. And D, which was defense. So I think, of course, auto did very well, then it did badly as well. So banking have gone wrong so far. Of course, private sector banks have disappointed, but I think ABC still continues. Consumption, C stands for consumption. Consumption is one of the sectors which has the decibel of noise, but not the past performance. So that means there is still money to be made in consumption. People generally get very excited with past returns. I think finance tells you that you should be depressed with past returns. So consumption has still not gone right. Doesn't mean that it will not go right. So mean reversion as a principle is what finance textbooks tell you. So ABC still continues, B and C more so than A and D, which is automobile and defense.
Okay, got it, got it. I'll just talk about the A that you have mentioned in the ABC. Feroz, what about do you think, because earlier we did see some reports by CM where they had said that the automobiles are in the precarious phase because of the reduced LPG supply for the current time being, and of course there could be some supply shortages. Do you see this as a risk in terms of production going ahead?
Yes, yes, I think it can. So when I look at sectors, because I only deal as a company with HNIs and ultra HNIs, I'm looking at those sectors which can beat Nifty by 3 to 4% compounded over the next 3 years. That's the premise. I should have told this earlier. So can it give me accumulating opportunity? The answer is yes. If one were to be able to beat Nifty for about by 3.5% for 10, 11 years, you will get as much as capital. If you have 10 crores today, you will beat Nifty by 10 crores in 10, 11 years if you beat it by 3.5%. So my sector calls are not from a perspective of what will happen in the next 3-4 months. Can this combination beat Nifty by about 3 to 4%? Is the premise on which this has been recommended. So you're absolutely right. Short term, there could be blips, and that's exactly when you build it. You buy low and sell high rather than the contrary.
Okay. What about the D that you were pointing out earlier, defense? How you place there at the current juncture?
Yeah, in that I see some stocks with very low free float, so they're very high beta. So at this stage, I will stay out of them.
Okay, all right, you'll stay out of them. But we have seen a lot of FMCG names have rallied quite well today, and so far this week, the FMCG index has done fairly well. Even in the Q4 business updates, they have mentioned that there could be some certain bit of a recovery from here on. Do you think that this is the one particular pocket which will do well going ahead? Like you were mentioning that it has bullish tone going ahead. Explain us what keeps you this rational going ahead.
I think FMCG, what happens is, of course, some of these stocks, the large ones, especially because they're nifty ones, are not so good. Why are they not so good? Because I also do one study to find out how much of the total free float is owned by index funds. One of them, a couple of PSUs have 22% of the total free float owned by index funds. How do we do that study is a separate story. But I think if you want to do consumption, FMCG, non-cyclical consumption, I would not go as specific as FMCG. Look at one of the funds which has some stocks, HDFC non-cyclical fund consumption stock. In that, that basically is your benchmark. That is a good universe for you to see as a proxy to play the C story directly, which I was alluding to.
Okay, got it. All right, Feroz, with that, we have to let you go, but thank you so much for your time and joining us.
Thank you.
All right, that was Feroz for you, and of course on what lies ahead for the markets and some of the quite a good formula that he gave us, that is your ABC for the market investment going ahead itself. But yes, we'll be definitely watching out for any potential ceasefire hopes between Iran and US over the weekend. But apart from that, back home, we'll also be celebrating Akshaya Tritiya, which is considered to be one of the most auspicious day for new beginnings. And with that, people have been buying gold quite aggressively. So we did speak to a couple of experts earlier in the day, and this is what they had to say on the correction of gold prices amid the geopolitical tensions. And they've highlighted the fact that any resolution or any truce in the war can trigger not just a rally in gold, but also silver. So do listen into this conversation.
What has transpired since end of Feb is something which we haven't seen since 1970s, when we actually faced energy shortage, and that is still not over. So what happens at those times is, because of a sudden spike in the energy prices, anywhere between 70 to 100% in just a matter of few weeks, it creates enormous demand for dollars. And that kind of triggers a selling in all associated assets, financial assets, and also gold and silver, because gold and silver thrive as an anti-dollar trade. So when dollar comes into demand, they are the ones who face the brunt. And that's exactly what happened over the month of March. But since then, the prices have stabilized. And we have seen quite a good rebound in gold from 1,25,000 to currently around 1,55,000 now. On the silver, from almost 2 lakhs to now 2,50,55 odd. So we have seen a stability and a bounce. But the question is it over, the price correction? It totally depends on whether oil has topped out or not, or whether the West Asian crisis is over. If it is over, yes, we have seen the bottom. We will see a sideways move for some time, which is good, a time correction, considering the kind of moves we had seen last year. It will allow for the jewelry demand to catch up, and then in the second half of this financial year, we could see the next leg up in gold and silver both.
But you cannot shrug a 5,000-year history with just 1 month's data. And this is not the first time it has happened. Even if you look at past episodes of GFC, even in the best of times when Lehman Brothers went bust, gold fell by 30% at that time. In the best of days when gold was expected to rally, when everything was selling off, gold corrected by 30%. Even during COVID, when the onset started in March 2020, gold initially fell along with equities, only to rise back. During these times, there is need for liquidity, and you can sell what is liquid and what can be sold with a lesser impact cost, and that is gold. So there are margin calls, there are need for various asset set-offs that you have to do, and therefore, people sell gold at those times from a positioning perspective. Second is, US was one of the least impacted in all of the crisis that we saw, although it was very much involved. But from a energy perspective, they were very least impacted, and that led to flight to dollar. And whenever dollar rises, there is a pair trading that happens where gold gets sell off against a dollar strength. And hence we saw the reaction from a financial market perspective. And third, the major gold buyers were impacted severely in the crisis. It was the Middle East, it was India, it was China. So these were bearing the brunt of the energy crisis that we saw. And hence that demand strength also lessened to an extent. And all this led to probably some sell-off in gold, some lower demand for gold, and that is why we saw the impact. But I think if the crisis were to intensify going forward as well, I think gold would still rally much more than what the fall that we have seen. So I think it was temporary, transient factors. This does not derail the long-term fundamentals of gold.